Hi, welcome to this video today, which is all about Forex trading basics for success. Now, in terms of what I'm going to be looking at today, it's what is called the Texas sharpshooter fallacy. If you've never heard that expression before, I'll explain exactly what it is in a moment. Now, most beginners who come in the markets make the mistake of falling for the fallacy. Even traders who've been trading for a while fall for it as well and cannot see that it is one of the fundamental reasons why they're not making money from Forex trading. It's a major problem. Now, in relation to the fallacy, we'll go through in great detail in a moment, but consider this, and you may have experienced this as a trader. You come in, you want to learn Forex, you go to YouTube or wherever, you see someone demonstrating a strategy that works fantastically for them. As soon as you try it, you fail miserably. And a lot of educators, when they are selling strategies, take advantage of the TSS fallacy because they know that inexperienced traders will fall for it. Now, it's actually to do with the way your brain processes information and basically looks for patterns. Now, it's just a major problem, not just in terms of strategy failure, but in terms of biases related to it. It causes a huge amount of traders to lose money. For example, how often have you been in a Forex trade? You're pretty convinced it's going to carry on in the direction you thought, then you stopped out, you're not in, goes exactly the way you thought. Or you're in a trade and, deep down, you know it's going to lose, but you stay with the trade. And then after you've stopped out, you say, I knew that was going to happen. Texas sharpshooter fallacy is the problem. Now, what I'm going to do is show you a quick intro clip to what it is, okay? Now, it's not being demonstrated in Forex here. It's just being demonstrated generally. Now, if you don't guess why it's a problem in Forex trading, I'll explain in more detail in a moment. Right, here's the intro, about a minute and a half, then we'll be back to discuss.
Abraham Lincoln and John F. Kennedy were both assassinated by a man with 3 names, 15 letters long. John Wilkes Booth and Lee Harvey Oswald. Neither killer would make it to the trial. Both men were shot on a Friday, sitting next to their wives. Lincoln in a Ford Theater, Kennedy in a Lincoln made by Ford. What are the odds? Why do deaths always seem to come in threes? How did the basketball make it in there from all the way across the court? Why did the tornado spare the church? Some things in life seem too amazing to be coincidence, too odd to be random, too similar to be chance. When you desire meaning, when you want things to line up, you see patterns everywhere. Order makes it easier to be a person, to navigate this sloppy world. You're born looking for clusters where chance events have built up like sand into dunes. Picking out clusters of coincidence is a predictable malfunction of a normal human mind.
I will get back off that short clip there. Now, that actually comes from an advert for a book which is called You Are Not So Smart. Now, the book itself is all about how cognitive biases in our brain fool us into not seeing reality correctly. Now, it's not about Forex trading. It's about, just general ways our brains are fooled. But, many of the biases he discusses, including the sharpshooter fallacy, are relevant to us as Forex traders. Now, in terms of the guy shooting at the barn, he isn't a sharpshooter at all. He just shoots randomly at the barn. If he shoots for long enough, some of those bullet holes will cluster. He can walk over, draw a bullseye around them, and he appears like a sharpshooter. Now, the important point to keep in mind is he's only a sharpshooter after he has done the random shooting. So the bullet holes that cluster are totally random. Now, as humans, what we like to do is see order. We like to see connections between things. Let's take John F. Kennedy and Lincoln. Isn't that amazing, those coincidences? Not really. They're purely random, aren't they? Just think of the differences between the two guys. Lincoln, a Baptist, Kennedy, a Catholic. One was shot in a car, one wasn't. Presidencies were different lengths, etc., etc., etc. Massive amount of differences and only a few coincidences. Yeah, it's just random, the coincidences that are discussed there. Why did the tornado miss the church? How many times did the tornado hit the church, etc., etc., etc. We want to see patterns, and very often what we do is we look backwards, see the patterns. They're not relevant at all, okay? We want to see order. That's just natural as humans. Now, in terms of Forex trading, I want to discuss the sharpshooter fallacy specifically related to trading and the biases that are related to it. The hindsight bias, confirmation bias, and another one actually, which is called the narrative fallacy. Once you understand these biases, you will understand what works in Forex trading, what doesn't, and also not make those mistakes that I've referred to when we started off this video. So let's go to a storyboard and discuss in more detail. Right, let's have a look at avoiding the Texas sharpshooter complex in Forex trading and basically becoming a successful trader. Now, in terms of point number one, predictive patterns and clustering. Now, most beginners, when they come online and look for a strategy to use, they're going to go normally for a predictive pattern strategy. The most popular at the moment, probably Gartley patterns. I'm sure most of you are familiar with them. They don't work. Basically, when you see those patterns, the person demonstrating the pattern, how it did work, it's just a random event. It's a bit like the bullet holes in the barn door, okay? And basically, you can get any pattern that you want. If you look at enough charts, you can make it work because it will show up as a random event. This is very true of any complex pattern. But that pattern is only obvious in hindsight and it doesn't work in the real world. And I'd strongly advise any beginner who comes to the market, forget about predictive patterns because no serious trader uses them. They're just there to appeal to the public, okay? When I say that, I think, what I said earlier is relevant. That, our brains are designed to see patterns, spot patterns. That's just part of the way we think. But Forex trading, huge mistake. Now, I did actually years ago develop my own pretty pattern, which I called a double triangle formation. It worked wonderfully going backwards. And when I tried it in the real world, it worked miserably, just failed totally. We all, I think, or a lot of traders will make the mistake of thinking the patterns will work. They just don't. The more complicated it is, the less likely it is to work. And the great news is that charting can be very simple. Now, in terms of people who don't even use predictive patterns, they can still fall for the sharpshooter complex. And I put down charting with diagonals, diagonal lines. These are a huge mistake over long periods of time. You very often see people draw a diagonal line back for a year connecting 2 points and the price might have moved by 30% or something like that. What relevance is that? Do you really think that traders who are really focused, the majority on what is happening right now, really care about what happened 3 years ago on a diagonal line? I don't think so. If you're using diagonal lines, I always use them in short periods only. And I call them trajectory lines if you're a regular watcher of my videos. And the reason I do that is just simply because I'm looking at the trajectory, the speed of the move in the short term, be it up or down. Okay, that's the only time I'll ever use diagonal. You can use, in my view, straight lines in longer periods if basically it's a key supply and demand level, because the price is the same. Okay, on a diagonal line, it's different. So if it's a big supply and demand level, nothing wrong with doing that. Okay, what else have we got? Number of lines. Lots of traders have all these lines on their charts. Let's say they've got, profit objectives. They've got about 6 profit objectives, very close together. Why? In terms of this, all you're doing is picking out probably some meaningless levels. If you're doing targets, it should be 1 or 2, not 6 or 8. I've seen people do even double figures. You're just putting too many lines on your chart. It's a mistake. Also, in terms of the sharpshooter complex, beware of how long you think about what to do with the chart. Okay, if you actually have to think about the chart formation and what you're going to do with it, there's nothing to do with it, and what you're going to try and do is find a pattern and find something to do with it, and that is totally wrong. Let's say myself, I look at a chart, I can decide what to do with it within a few seconds, and that should be the same for any trader. Okay, if you don't see anything straight away, there is nothing to do. All right, price action and trading in the moment. Now, a lot of beginners when they come into markets, they read about price action trading. Just follow price action, you can make money. Now, this is true. Okay. However, when they look at the chart, they think it's too easy. They see the consolidation. They see that big trend. I've got that. I can spot that, etc. Well, of course they can, because they've got hindsight on their side. Anyone could trade knowing the price. When you actually trade in the moment, it does obviously become more difficult. And this is where I sort of caution beginners that you are going to make mistakes when you start, and you are not going to find it easy. Let's say you can master it, but it takes a little bit of time. I mentioned earlier on about a person looking at a trade. They want to do it, they want to get in, no big trend's going to develop, and they either miss it or they get stopped out early. The reason for that, of course, is you're trading in the moment. When you look back on it, you kick yourself, but that is in hindsight again. So price action trading, anyone can master it. It should be very simple, okay? But it's not easy. Okay, is my point. Beware of confirmation bias. Confirmation bias is really basically our pursuit of order. We want things not to be uncertain. So once we've taken an opinion, okay, in the Forex markets, it's very difficult to change that opinion, okay? Traders will hang on to a trade that they've got, despite the fact deep down they probably know it's going to lose. They're not used to dealing with uncertainty. They want order. They will hang on to the trade. They will lose, okay? You've got to be aware that what you're going to try all the time is look for supporting evidence for why you should stay in the trade. What you should be really doing is basically looking for both sides of the story. Also evidence of why you should come out the trade. And if the evidence is stronger to come out, get rid of that opinion, get rid of trying to confirm your bias, and get out. It will save you a lot of money over the longer term. Point number 6, narrative fallacy and illusion of order. Again, I think this kind of fools beginners, because when they start looking at Forex markets, they might be reading the news on Bloomberg or CNBC, and what they're seeing is the narrative fallacy, which is a term that Nassim Taleb came up with, one of my favourite authors and traders, where he said that what they do effectively in terms of financial reporting is just basically look at what happened with price and just fit a story to it, even if the story is not true. And you watch the news and you see all these experts, they explain everything that happened, and it all sounds very logical, it all sounds very simple, and it makes it sound like this could be easy. But of course they're doing it after the event. When you look at all these experts trying to predict forward, they're hopeless at it. Okay, so I'm stressing it's not easy. Being a successful Forex trader obviously is very, very achievable. Now I put trading chaotic price action. The reason I say that is you are trading chaos, you're not trading order, you're trading a market that's not predictive, you're trading a market where you're really trading the odds, okay? And as humans, we want to understand everything. I think with Forex trading, you just got to forget that, okay? A lot of times prices will move in a direction too far, in my view, and I don't understand why, but that's just the market, okay? It's human psychology, okay? Humans are not predictable. I think you just got to get used to the fact that it is chaotic. You can get any trade wrong, but if you trade with probability, you can win over the longer term. Now, in terms of charting itself, what I would say is, if you're trading, with technical analysis, get used to looking at the price action as it is mostly right now, okay? And learn to read the psychology from the candles of the charts and basically only use very few support and resistance lines, okay? Also, stick with methods that are probability based and not, predictive, Breakout trading, still a great way to make trading profits, sorry. Also, you can go for failed breakouts. You can go for basically price spikes, which you know are going to fade. Take a bit of time to learn the candles in relation to the psychology. And like I said, keep your charting very simple, very basic. Also, when you're looking at the charts, do not do any trade setup unless it basically hits you straight away within a few seconds, okay? If there's nothing to do, there's nothing to do. There's plenty of pairs you can look at. There might be a better opportunity or an opportunity in another pair. I think, in terms of the sharpshooter fallacy, it applies in life. It is to do with our seeking of patterns, our seeking of order, okay? And it does bring out, the hindsight bias, the confirmation bias, and also, a lot of traders will also believe in the narrative fallacy. So, I hope you enjoyed the video. I would strongly recommend you go and read the book, You Are Not So Smart. It really is just a fantastic read. It covers a lot of cognitive biases, not just the ones we've covered here. Not only did I find it, I knew all the biases in it already, because another great book to read is Thinking Fast, Thinking Slow by Daniel Kahneman. But I just thought You Are Not So Smart was just so easy to read. It was witty, it was informative, educational. Fantastic book. Right, that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.